Welcome, everyone. Today's webinar is to talk about income and taxes. And so we're going to break this into two pieces. The first piece dealing with the income side, the second dealing with taxes. And as Wing mentioned, we do encourage your questions as we go throughout. So let's first talk about income. When people talk about wanting to improve their income, which most people do, it's usually linked to career. And so what is my career? And usually we find people are in three stages of career. The first is uncertain. It might be that I'm just starting out, or I'm not sure where to go. The second is I may be stuck. I feel the need to change. I want to make some changes, but I'm not sure exactly how. And the third stage is I'm certain. I'm in a career that I enjoy, that I like, I'm productive, but I may need to increase my income. So we're going to speak to all three of these throughout this first part of the webinar. Let's talk about the uncertain or the stuck. You may be in a situation where there are many doors in front of you and you're not sure which one to go into. You feel like a number of things are pulling you in different directions. Well, one of the ways to start, if you're in this situation, is to think back to what did you want to be in elementary school or in middle school? And what do you think you'd like to do now? And this is an important part to start, is to start jotting down ideas, thoughts, start to explore. I want to really emphasize that term, explore different options. And the first place to start to explore is you. We're all built differently. We all have different things about us that can lead us into different careers and help us with our success in different careers. And the more success we have in the career, generally, the better the income is, as we relate to that. So the first thing to look at is personal preferences. Do you like working 8 to 5? Or are you more of a night owl? Is there a geography you want to live in and work in? Next is looking at things like your interest and skills and abilities. When you look at and generally these two are linked. You're generally good at those things you're interested in, and you're generally interested in those things that you have a skill around or an ability around. So when you look at those and say, what am I good at? That's going to help make for a productive career. Another way to look is to look back at achievements. What kind of things have I accomplished in the past? Those are generally predictors for things that you'll be successful at in the future. So when you look at the things you've accomplished, even going back into school, into your grade school and high school years, what were you good at? Were you a team captain on a sport? Did you excel in writing? Whatever those achievements were, did you win any awards? Those are things to look at and say, how can I build upon that? Then start to look at your personality. So believe it or not, everyone is born with a unique personality, and there are different personality traits that lead towards different careers and different fields. So when you look at all that, you can look and say, okay, Stan, there are a lot of information there. How do I go about evaluating that? Well, there are tools out there that will help. Okay, one of the tools is our career assessments. You can go online and type in free career assessments, and you'll see a lot of different tools pop up. Now, when you do that, you will also see that most of these free sites have something before the paywall, so something that is free, and then they have more detail behind the paywall. Most of what you're going to learn about yourself, you can learn before the paywall, so before you end up paying for something. When you start to get some ideas, job shadowing is a very important way to find out what's a job like. So finding someone that has that particular job and shadow them. That ties into the next one, which is networking. Networking is critical. Networking is simply meeting new and interesting people and learning about them. A networking interview can be hi Wing, I'd like to know more about what it's like to work for the city of Portland. Or hi Stan, I used to be in the technology world. I'd like to learn more what it's like to work in technology. Can you spare a few minutes? And even during this pandemic time, it's actually easier to meet with someone over Zoom, over the phone, because there's no commute time. And you don't have to worry about showing up at a coffee shop to meet for coffee. So networking, while some people say it's more difficult now, it's really easier now. At least that's been my experience. Talking to people is what's going to help you. Showing people your background and saying, this is what I've done. Do you think that fits with where you're at? And would that help? You can look for internships and volunteering. I volunteer for Financial Beginnings and have for a year and a half. Financial Beginnings is a nonprofit that teaches financial literacy. And Financial Beginnings Oregon, the Oregon chapter, just posted 2 jobs. So by volunteering, I knew about those job postings, and if I wanted to, I could apply for those jobs. The last area is career counseling. Now, career counseling can take a wide variety of forms. You can hire private career counselors. That can cost money. Or an alternative, a very good alternative, is to go to the community college. Community colleges are a vast resource for the community. That's why they're there. And this is a program that Clackamas Community College puts on every term. Okay, and so the spring term is coming up, and it's called Life and Career Options Program. And it's a way to try and figure out what you want to be when you grow up, particularly for adults. So if any of you that are watching this today are adults in that position saying, I'm not sure what I want to be when I grow up, this may be a program that can help you. And there'll be an ability to get this information from Wing during this presentation or after. But go to Clackamas Community College and remember Life and Career Options Program. They call it LCOP. It is $80 a term, but they have scholarship opportunities for people with need. So it's very affordable and a great program. Meets in the evenings, Mondays and Wednesdays. So even if you're working days, it's an ability to get around that. So, and in the chat box, you've seen both an email address that you can email the Fix It Fair, the City of Portland, as well as the link to this program. So if you're struggling with that, I'm not sure what I want to be when I grow up, I would strongly recommend that you take a look at this. Now, once you start to narrow in on a career, one of the important things to look at is will this career provide the lifestyle I'm looking for? What does this career pay? The Bureau of Labor Statistics has a website. Here's the link, and again, you'll be able to get this link. And you can choose a state, choose an occupation, and review salary ranges. This is an example, and it's a little dated, 2017, but it's an example for a social worker.
Oh, hey, Stan, this is Wing with the Fix It Fair. I have been so captivated. I just realized that you're not sharing your screen.
Oh, no. Oh, okay. I'm so sorry. Okay. Wing, would you like me to step back?
Only as you see fit. It looks good right now, by the way.
I'm just going to show you that these are the tools that we talked about: the career assessment, the job shadowing, the networking, and the career counseling. This is that program that I mentioned, and the program at Clackamas Community College. And again, I apologize to everyone for not sharing my screen. This is the website for Bureau of Labor Statistics. And so what this website will do is allow you to, as I said, choose the state you want to live in, choose an occupation, and review salaries. So this is an example for a social worker. You can see that, and what they do is they break it down into percentiles. So the bottom 10% social worker in this particular state would make roughly $34,000 a year. The top 10% would make roughly $86,000. So in the median, in the middle, you're somewhere around $61,000, $62,000. So you may start somewhere in this range and have the ability to move up. But this gives you a feel for, is this career going to support the lifestyle that I'm looking for? And so that is something that you should look at as well. Now, one of the important reasons for doing research on salaries is that you want to make sure that A, the salary meets your expectation, and two, it helps determine the return on investment if you're going to go back for more education. So if you're going to move to a position that might pay you $10,000 more, but it costs $20,000 in education to do that, that may not be a good return. But if the opposite is true, if you're going to move into a field that can dramatically increase your income for a smaller investment in education, then that may be a good investment to do. But it also can give you a range of what your starting salary may be. And so I think that going to the site, once you start to narrow in on professions or careers, can help you as you start to explore different career options. This is just a brief worksheet that you can step through where you say, okay, what's your field? What position are you looking for? Will you need to work up to it? What's the necessary education and skills, and what are the average salaries? Find the 3 different sources. So again, this can help you evaluate what career options you may want to be exploring. Now, you may be in that situation. Remember, the third category is I'm certain. I know exactly what it is that I want to be, but I want to make sure that I'm prepared for the future, okay? Things may change, careers evolve. So make sure you're preparing for possible career changes. Make sure you're staying current on technology. Make sure you're staying current on your field, your career field. And again, a quick Google search will tell you what a variety of different newsletters or websites on your different career where you can stay current. And once a month, check in, once every quarter, check in and see what's going on in your field. Throughout this career discussion, it's important to remember that life is a balancing act, okay? Career is important, finances are important, but balancing that with family and leisure are important too. And that's part of deciding what you want to be when you grow up. I've met a lot of people in my career that worked 80 hours a week, and by the time they retired, they had no relationship with their family. So while they made a lot of money, having that relationship with your family is also important. Knowing what you like to do when you're not working. Nobody wants to work all the time. And so finding that balance that's right for you is also part of this career exploration portion. And that's also part of that that Clackamas Community College screen that I threw up there that will you can go to as well. So let's segue over then into the section called taxes. So there are 2 things we can be sure about in life, and you've heard this saying a lot: death and taxes. All right. When you look at taxes, you're going to pay taxes if you're working at all, and in a variety of aspects of life. There are really 4 different categories of taxes. The first are income taxes. And so when you are working for an employer, when you're self-employed and you file your taxes, you're going to pay federal, state, you may pay city, and then FICA. FICA is your Social Security contribution. And so this, when you're working for an employer, is automatically deducted from your paycheck. If you're self-employed, then part of your filing your taxes at the end of the year will involve calculating these. We're going to step through that process. Sales tax. So Oregon is fortunate in that we don't have sales tax. Other states, if you go into Washington, you will pay a sales tax. And sales taxes can vary on general purchase, luxury items, or food purchases. One of the areas that states will oftentimes do in luxury items is they'll take a look at have a luxury tax for higher end cars or boats or things of that nature. So one area that state and federal government gets their tax is from sales tax. Asset tax. So if you own real estate, then you're going to pay property taxes. So real estate taxes are also called property taxes, and they're assessed by the county that you live in. There may be a city assessment as a part of that, and so that is how your real estate is taxed. If you own any stocks and you sell them at a gain, you're going to pay tax. You're going to pay either a long-term or a short-term capital gains tax, and that's it. When you make money on a stock, you buy a stock for $100, sell it for $120. That $20 is taxed as a gain, and the long and short-term nature of that is depending on how long you've held that stock. So generally, less than a year is a short-term gain, more than a year is a long-term gain, and they're different tax rates. The short-term's a little bit higher. Excise tax. Excise tax are built into the price of things that you buy: gas, cigarette, travel. So when you go to the gas pump and you see the price of gas, only a portion of that is going toward the oil company or the gas station. Another portion of that is going to the government. The state is charging a gas tax. Cigarettes have the same excise tax built in. Travel has excise tax built in. If anybody has booked a ticket using frequent flyer miles, you'll notice you still pay a few dollars, and those are the taxes that you're going to pay on that trip, independent of the airfare that you're waiving through the frequent flyer miles. So these are all four areas, and every state balances these four. The federal government has their income tax, and then the state balances the taxes in these other three categories, in addition to their income tax, in how they're going to collect their revenues. Let's talk first about the federal income tax. So the way our federal income tax is called a progressive income tax structure. And that means that as you make more, you pay more. And that's what the progression is. And this is, again, a little bit dated. They've been updated since then. But the first $9,500 is taxed at 10%. And then from $9,500 to $19,000, this is individuals. So the first 0 to $9,500. From $9,500 to $38,000 is taxed at 22%. And on down. Anything over 500,000 is taxed at 37%. So you pay tax at each category, and I'll show you an example of what that looks like here in a second. So if somebody says you're in the 12% tax bracket, does that mean you pay 12% of your taxable income? No, it means that the last dollar or the marginal tax rate is 12%. So in this environment, once you got above $9,525, now you're paying 12%, but everything before that you paid at 10%. Then you've got something called a marginal tax rate versus an average tax rate. That 12%, that's your marginal tax rate. And that's the tax percentage on the last dollar earned. Your average tax rate is the average of all the taxes that you've paid, okay? And we'll show you an example on that in a second. Tax deferred means income on which taxes are postponed. So if anyone works for a company and has a 401k or an IRA, an individual retirement account, and you put money into that, that goes in tax deferred. So the tax deferment means that it goes in pre-tax. So that money is not part of your calculated taxable income. But then when you pull the money out, as you get above age 62, then you're going to pay taxes on that money at your then tax rate. The theory behind this is that you're going to be in a lower tax bracket when you're retired than when you're working, and so your tax bracket would be lower. So that's what tax deferred is. Now I'm going to take a quick segue, and that's a traditional IRA or a 401k. You can also have a Roth IRA or a Roth 401k. And what a Roth is that's money that's taken out after tax. And it accumulates tax-free. And then when you pull the money out, there are no taxes because you pay tax on it going in. So there are some real advantages to doing a Roth IRA in addition to a traditional IRA or 401k. So average tax rates, here's where you would find the 10% on your first 9,500, 12% on the next, 58,000, you pay 22%. So if you made $80,000, you'd pay about 15,500, and this is on the 2017 tax bracket, 2018 tax bracket. So it's changed some. But your average tax rate is 19%. Your marginal tax rate is 24%. Your average is 19. So when you hear somebody say I'm in a 24% tax bracket, understand they're not paying 24% of $80,000. They're paying an average, in this case, happened to be 19. Now, states also charge income tax, okay? Oregon charges 9.9% state income tax. Washington, Nevada, Wyoming, South Dakota, Texas, Florida, they don't charge any state income tax, okay? Alaska. So what each state has done is they just created a balance, if you will, on where they're going to get their income. Because the state of Oregon started with, and I'm showing you in a second, no sales tax, they said, we're going to charge more for a state income tax. And so there is a progression within the state of Oregon income tax. It starts lower than 9.9%, but it jumps up to 9.9% pretty early on in your earnings. And so generally speaking, you're in about the almost 10%. And these dark states are the higher level, and you can see the range here. Green, the lighter green is the lower level. The darker blue is the higher level. So New York, Minnesota, Oregon, California, Hawaii, these are all high state income tax states. But when you look at sales tax, Oregon, Montana has none. Okay, so California's got pretty high, that's that dark purple. And so when you look at, this is part of that career, where do I want to live? This may play a role. Okay, so in Texas, you have no state income tax, but you pay 8.17% sales tax. So you're, depending on if you, as you move towards retirement, a no state income tax state might be advantageous. A lot of people retire to Florida from the East Coast. So that may be advantageous in not paying state income tax, but you are going to pay a sales tax. Again, Florida, not a very high sales tax. Hawaii, not a high sales tax. And Alaska, even less. So it's finding a balance in the different taxes that you're going to pay. So let's talk about how your income taxes are calculated and how they're paid. There are 4 stages to the income tax process: a W-4, a pay stub, a W-2, and a tax return. Let's talk about those. A W-4, when you go to work for someone, you fill out a W-4. And here you're going to put down numbers in these categories called exemptions. Okay, so enter 1 for yourself, enter 1 if you're married and only have one job, your spouse doesn't work, or you're single. Enter 1 for if you have a spouse that does work. And then you can put different numbers in this. The more exemptions you put into this W-4, the less tax is going to get taken out of your paycheck each pay period. Okay, so the fewer the number, the more tax it'll get taken out. And that becomes important as we end up calculating what we owe at the end of the year. Then you're going to get a pay stub, and you'll see that if your salary is $1,300 for this pay period, but your net pay is $1,153, that's because of your deductions, right? Your federal, state, Medicare, and then your Oregon tax, okay? You also may have a 401k contribution that's coming out as well. Then at the end of the year, you're going to get a W-2. And if you're out working, those of you on this webinar, then you've received a W-2, and you'll see that wages, tips, and other comp are different than your Social Security wage. This difference is any 401k contributions that you have made. Okay, so your employer is taking those out pre-tax. And so while this is reported to the Social Security Administration for calculating Social Security later in life, this wage box is what's used to calculate your tax owed. So now you go to the filing process, and we start with the income, different areas that you receive income: wages, interest, dividends, any stock sales, any Social Security you're receiving. These all go into the income bucket. Then you take out deductions. There's something called the standard deduction that everybody qualifies for. But if you want, you can also, if you have more than a standard deduction, then you can do charitable contributions, business expense, excessive health care. And if these total more than a standard deduction, then you can use those. Or what most people, particularly with the tax change that occurred a couple of years ago, the standard deduction got increased and it made tax filing easier. So generally, you're going to have the standard deduction, which is defined by your category, whether you're single or married, filing jointly, will determine what your standard deduction is. From that, you're going to, the system calculates a tax rate, okay? And then you look at the tax rate, like we looked at those brackets before. So your income minus deductions equals the taxable income, and then you multiply that by your tax rate. That then equals your taxes owed. So you go through this tax filing process and you say, all right, how much? I owe $15,000 in taxes in that one example that we came up with. Then we take a look at the taxes owed minus the taxes withheld. So those are the taxes that have been withheld throughout the year from your paycheck. And that equals, do I have to pay money or am I getting a refund? Now, a lot of people will say, I want a big refund. And I'm going to say you probably don't want a big refund, because that means you're lending the government money free throughout the year. So if you're getting a big refund, then you can go back to your W-4 and you can adjust the exemptions. Okay, take the number of exemptions up. Adjust them so that you have less money taken, less taxes taken out of your paycheck, and therefore, ideally, your goal here ought to be, I owe the government $1, or the government owes me $1. That's the goal. Now, you're never going to get there. Nobody can predict that perfectly, but you really don't want to be getting a big refund from the government. Now, if you adjust your W-4 and you find that you're spending that money, and you need and you want that as a forced savings account, then for some people that works that way, and they get that forced savings account, they get that refund. But just think, if you can increase your take-home pay each pay period, what you might be able to do with that in reducing debt and saving for the future, that may be a positive way to go. Tracking. So how do you keep track of all the things throughout a year? Well, there are a variety of ways that you can keep track of donations, expenses. 1099s are what you'll get from anybody that you've either have interest owed or a 1098 interest that you've paid, like a mortgage, alimony or child support payments, contributions to retirement accounts. So there are a variety of different ways you can do tracking. But I'll tell you, what I use is a manila folder. I have this in my drawer, my desk. And every time I get something that looks like it might be related to taxes, I drop it in that folder. And then at the end of the year, when I get ready to file my taxes, I pull that folder out, I organize it, and file my taxes. Put all my income components together, look at my deductions, and then step through the process. So it really doesn't have to be all that difficult. The important thing is have a place to put it. When in doubt, put it in the folder. When you go to calculate your taxes file your taxes at the end of the year, then you can go through and say, okay, I don't need this, or this is a duplicate. If you're making regular charitable donations and they send you a statement every month, you can put each month in, and then at the end of the year, you can take that last one, will have the year-to-date giving, and throw the rest away. But if you have it all in one place, it makes organizing and filing your taxes so much easier. Now, preparing your taxes. There are a variety of ways you can prepare your taxes. You can do it yourself, okay? You can hire a tax specialist. And in hiring a tax specialist, you can do it online. So depending on your income bracket, there are sites that'll do free federal and pay for the state, or there are online nonprofits that'll provide free tax assistance to low and moderate income individuals or families. So there are a variety of resources on where you can go file your taxes. Or if you have a complex tax return, then you may want to go see an accountant. Or go to organizations like Jackson Hewitt or H&R Block or other organizations like that. This is not a commercial for them. Investigate those, but there are a variety of options to go through and understand it. If you have a very simplified return, I know my kids, when they first got out of college, they just went online and filed it right online, and it was very simple and easy to do. So what? Now what do you do with your taxes? Well, the first thing that you want to do is take a look at your last tax return and see, did I owe a lot of money, or did I have a big refund? If I owe a lot of money, then in either case, I want to go adjust my W-4. Okay, remember, the more exemptions you have, the less tax they take out. So the less tax they take out may mean the less you're paying throughout the year, and therefore you may owe. So if you owe a lot, you may want to decrease the number of deductions and exemptions, and that will help you with your taxes. Review your withholdings, analyze your deductions. Look and say, am I really deducting all the things that I should be deducting? And then make adjustments. Quarterly, if you're self-employed, you're supposed to pay quarterly taxes, or at least evaluate this and see. And so in addition to volunteering for this nonprofit, I do independent consulting. And so every quarter I do an estimate on my taxes and send in a prepayment. The government doesn't want you to pay zero throughout the year and owe a big amount at the end of the year. If you owe too much at the end of the year, they're actually going to assess a little bit of interest and penalty for you. Develop that system for tracking your documents. So I want to go back to the two stages of this, looking at your career and looking at the tax side of things. Looking at your career, find that balance between, am I doing something that's fulfilling and providing the right level of income? And look through some of the different options that are there. On the tax side, look at your last tax return and evaluate. Am I getting too big of a refund? Am I paying too much money? Make the adjustments, collect the right components, recognize that you are going to pay taxes, and find that balance in life.